Over in Japan, how many of you are worried about inflation out there in TV land, by the way? In Japan, very, very different scenario. Consumer prices fell by the biggest quantum on record last month. Bernsey, you are enjoying this. You're loving it. The price of a pint of Guinness is falling so fast you can't get enough of it in your system.
Well, things are getting cheaper if you're a consumer. That's a good thing. If you're a retailer, it's pretty terrible, and prices have fallen for a sixth straight month through August, excluding fresh food. They were 2.4% lower than a year earlier. That's bang in line with economists' forecast. The main reason for that drop is cheaper oil. Crude costs half as much as it did when it reached a record high in July last year. Excluding energy costs, consumer prices were 0.9% lower than a year earlier. No change from the previous month. Deflation is also being fed by price cuts from companies such as Japan's biggest supermarket chain, Aeon, which also runs the Just Go chain. It started selling $10 jeans this month and discounted 5,000 other items. And demand for cut-price goods may help convenience store operator Lawson raise profits. The Nikkei newspaper saying operating income was 2% higher than a year earlier in the 6 months through August. It says the reason for that is that sales are rising at Lawson 100, which sells goods for 100 yen, or about $1.12. Lawson 100 recently merging with 99 Plus, which undercut it by 1 yen. Knocked those dastardly competitors out of business for undercutting it. Bernie.
99, 100, oh, come on, what's the difference there? That's actually the trend, isn't it? I understand that the new generation, what are we in now, Y or Z, they don't have this obsession and possession and addiction to having the latest Murakami bag like they did a few years ago. I mean, cheap is chic now, isn't it? I mean, the whole spending pattern is not what it was 10 years ago.
There is one bizarre sort of bag trend, which is paper bags made by designers like Armani or Versace or whatever. When you buy your stuff and they put it in one of those paper bags, people save those and then they use them to carry their bento box around, and they actually sell those on Yahoo Japan. You can pay like 5,000 yen for a used one in good condition. But people are shopping discount, fast retailing, which operates Uniqlo, doing very well. Same-store sales rising this year every month but one. Also, Don Quixote, which is my favourite store, is floor upon floor of cut price, pretty much anything. They're opening more and more stores in central Tokyo, pandering to people who you know, want a little bit of consumer therapy but can't really afford to splash out.
I stepped into the Don Quixote in Kobe, or was it Osaka, Japan. Man, they've got everything from super glue to sneakers. I've never seen such diversity in a retail setting. Thanks, Mike. The yen down for the first time in 6 days. Speculation Japan may actually intercede. Yesterday, it reached an 8-month high on talk. The government kind of likes what's going on in order to get people to spend on those cheaper imports. The guy in charge says no.
I never said I will leave the yen to strengthen. Countries shouldn't compete to see who can weaken currencies more.
Does a stronger yen solve the problem? Some say,
It is time for the consumer to take its rightful place. A strong yen is not necessarily going to put the Japanese consumer front and center yet. We have to get domestic demand-led growth started, and a strong currency is not necessarily the formula for that.
Okay, are they barking up the wrong tree? Is this the wrong prescription? When you're manipulating or not manipulating, is that a mistake? Patrick McNutt from Manchester rejoins us from Singapore today. Professor, is what's going on in Japan? Is this a poster child for the proper policy? Are they completely detached from reality?
I think in Japan what you're looking at now is an end of quarter, end of annual strengthening of the yen. And it's going to hurt the Japanese exporters, but it'll be good for the Japanese consumer. But I predict that by the first quarter 2010, we'll probably see the yen back up to 100 against the dollar.
Okay, let's lay it on the line. Basically, you are not a believer in the free market, correct, when it comes to currency rates. You feel that in this world, the way governments are interceding with stimulus programs and all kinds of highfalutin policies, that a free-floating exchange rate mechanism is complete nuts. It's completely wacko for the kind of world that we live in today.
Yeah, I think certainly at this time period in our economic history, we need to have some stability in exchange rates. And what we're promoting is something like a 2-year managed exchange rate that allows governments, whether it be the Japanese or the Chinese or the Americans, that allows them escape clauses where they can still use their domestic policies to restore their economies. But yes, for this time period, something like a 2-year period, where you've kind of got a quasi-fixed exchange rate, and then after 2 years we can reevaluate it. And indeed, this new supervisory board that's been planned under the G20 would be an ideal mechanism to oversee a managed exchange rate.
Are we talking? What are we talking about? Are we talking about like pre or post Bretton Woods, Paris Accord? What kind of model are we discussing here?
Yeah, we're looking close to something like Bretton Woods. It's not really a return to the gold standard. It could be something as simple as maybe, well, sorry, it would be complex, but if you accept that the world is broken up into 6 big trading blocks, and then maybe we just require 6 major international currencies, and that those 6 international currencies would be linked in a way which would at least eliminate this currency misalignment, which is not only affecting corporate earnings, but it's contributing to this imbalance in world trade, where you've got so many developing nations who need to export. But to where are they going to export if we have, for example, America with the devalued dollar, and they rely on exports. And we've done some estimates that many of the developing nations by 2015, for example, Bernie, could be contributing as much as 50% of the world growth. But that'll only happen if they can export. So I think there's a fundamental difference, not just about the exchange rate, but to shift towards more export-led growth around the world. And that does require us to manage the exchange rates for a given period of maybe 2 to 3 years. And then after that, then we can reconsider the position.